In a few minutes, I'm going to teach you how to become profitable just by using this simple strategy, and it is major key levels. So stick around. Now, before we begin, I just want you to appreciate for all my subscribers, for all my viewers in my YouTube channel, and I want to tell you to keep sharing this channel to reach more people. And when we reach 1,000 subscribers, I'm going to provide a free program uh, for those who are in my WhatsApp channel. So thank you very much. Make sure you subscribe, you turn on notifications, and you share the videos to others. And of course, also, please follow my page on Instagram. A lot of valuable content in there. So thank you very much. So let's go back to the lesson. Now, I have already teach a lot of lessons concerning major key levels. So if you haven't watched that, go on and watch them. I taught how important major key levels are. I taught how you can identify major key levels, how to mark them, and how to use them also. But today, I just want to give you a little bit of an example of how to use major key levels in your advantage. So I took a trade today. Of course, I took many trades today, but this one was one of the perfect trade that I took, and I made like 150 pips on gold, and I used daily major key levels. So how did I use them? Let's go and see. So let me delete everything here. Now on the daily chart, before today opens, so let me put a line here to 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 differentiate the yesterdays and today. Now I used this candle, the yesterday's candle, the daily candle, major key levels to trade today's uh, price movement. So how did I mark them? Of course, I already teached it, but I'm going to also teach you how to mark it. So we mark all the highs and lows, the opening and closing. So we mark the closing and we mark the open, and of course we mark the high of the candle, and of course we mark the low of the candle. And from there now, we need to observe which level from one level to another, which has a farthest distance. So we can see from this point here to this point, it is a little bit far. So we need to reduce it. How are we going to reduce it? We look the price action to the left. If we see any highs and lows, we mark the bodies. So we can see the highs and low here. We mark that body, okay? And we can't see any other data. So we can use these levels that we marked to trade these price action of today. So this is how. So I went all the way to 15 minutes. This is where this is the time frame. If I am using daily, I always go to the 15 minutes to look for the reactions and the confirmations. But if I use the weekly major key levels, I always use 1 hour as my time frame to look for reactions. So you can use any other time frame, but this is my preference. Okay, so I go always all the way to 15 minutes. So this is the price action for from yesterday's candle, and this is the today's price action. So let's see how price reacted through the levels. Okay, through the levels. So you can see price opened. This is the line where it differentiates between Monday's candle and Tuesday candle. So you can see price reacted to all the points there. So you can see this reaction here. Price went below, reacted here, price went up and then came back to break the area and then retest. And then you see all this reaction, you could use it to trade. Okay, so if you see a reaction like this, you go to the lower time frame, maybe 1 minute or 3 minutes, and then you look for the entries. So this was Asian session, but I traded the starting from the pre-London session. So you can see from here, from this point here, this is where I started trading. So you can see price went to this level, reacted, and then price came up below to this level here, and then closed below, but the second candle closed above, making a strong level of what? Of support. Okay, I've already talked about levels in the market using candlesticks. So if you haven't watched that video, go on and watch it. So after this candle here closed, I begin to see if I can get an entry, okay, from this candle to buy towards this level here. So this was my first entry to of this day. And I begin to see price. This was the candle that closed above, okay, and you can see the price action of it. Price managed to provide us a clean shift, and then it went above and created another breakout structure, and I used this some sort of a formation, but you can use even order block for those who are using order block. So this was my first entry of the day, and I traded from this point to this level here, which was 100 pips, 120 something pips. So this was my first entry. Okay, this was my first entry. So I went back again to the 15 minutes to look for the reaction towards that point. Okay, towards that point, and I begin to see price printing a lot of candles going up, and then it reacted to this point. But when price reacted to this point, I begin to see we had this structure here. So definitely this point here, this level here, the reaction of it was to make price coming towards this area of liquidity here. Okay, so if you go back to the 1 minute to look for the entry, you can see price came all the way from that point towards this liquidity area, and it provided a little bit of a deviation below this low. Okay, below this low. For those who entered this point here, maybe a liquidity engineering, the stop loss, they could we could hit the stop loss. For example, if we measure from here, it was 20 pips. So we could hit a stop loss, but we could recover it later. How could we recover it? You can see price after it breaks this level here, providing us a shift. Remember, I taught a lesson concerning nature of break. So if you haven't watched that nature of break video, go on and watch it, okay? So this was a sudden break. So meaning, if this is a sudden break, we need to observe price coming back around the area of break. So normally, if we have a sudden break like this, price cannot go all the way. Sometimes it's go all the way inside, but you can see price didn't come inside, and it just stopped around the area of break. So I begin to see how am I going to enter that area. So I entered after price created another shift inside. This was a very quick price action, and it left us with another liquidity engineering. See? So because this level was already being reacted, and we see price already printing uh, levels for us to buy, so my take profit was the level above it. So this was the biggest trade actually today, and I took the trade from here to this level, which was 300 pips. See? 300 pips. And then I waited for a little short moment after price reacted. If we go back to the 15 minutes, we see price reached this level and failed to break above twice. The first candle failed, the second candle also failed. So if you go back to the 1 minute to look for the entry, we begin to see price creating a shift here, and then left us with a liquidity engineering, which was a very good level for us to sell. And I took the sales towards this level here. Okay, so from here to this point here, it was also 300 pips. So you can see 300 pips, 300 pips, and another here in the morning, which was 120 something pips. So you can see you can be just profitable just by using these levels, major key levels. And it doesn't matter the strategy you are using, okay? It doesn't matter the strategy you're using. You just have to align your strategy with this strategy so that it can help you during your analysis process, okay? So this is how I managed to get these 3 entries today. Very, very simple entries. And using just major key levels of the yesterday's candle to trade today's candle. So that's all about this lesson today. And if you want to learn more about this lesson, please go on and watch those videos concerning major key levels. It will teach you how to mark them, how to use them, and how to plot the entries using these major key levels. So thank you very much. See you on the next lesson.